What the heck is happening right now in the condo space? Stay tuned for this month's Prime Properties TO podcast. Promise you, it'll be worth it. Good day, Toronto. Welcome to our monthly podcast at Prime Properties TO. I wanted to take this month to kind of go through what exactly is happening in the condo space in Toronto specifically right now. There's lots of headlines out there, and depending on what numbers, what stats that you're pulling from, you're going to be hearing a different story. So one of the articles I read was prices for condos are up from last year, up 8%, which sounds all roses and daisies, right? Because it's good. Another one said that condo market is actually coming to crash. So no one really is elaborating into detail what exactly is happening in the condo space. So I want to go into the numbers, go into the details, and tell you exactly what is actually happening and what I'm seeing right now, okay? But before we kind of get started with that, right, you have to understand where the condo market is coming from and what's been happening since 2019, okay? Now, you guys can't see it, but I have like a whole bunch of spreadsheets in front of me right now, just analyzing the numbers. But we'll obviously explain it in a more easier to understand and digestible way. But I want to show you kind of what's been happening since January 2019 in terms of prices, okay? We're going to be strictly looking at condos right now in the Toronto area. Essentially what's happened is we were at about $590,000, and all the way until now, we've increased up to about $666,000 on average, okay? So if you look at that 18, call it 20-month span in the run-up in prices, we're definitely increased, okay? But what the story doesn't actually say, or so what these numbers don't actually say is what kind of fluctuations we've experienced, okay? Because the freehold detached market has come down significantly from 2017, 2018, and they're only starting to recover. The condo market was actually on fire starting from January 2019 up until now, okay? But we saw a major run up in prices in October 2019, where we were about $650,000. And then right up before the coronavirus, we spiked to an average of about $740,000. That's really, really high. But what happened right after was from March of 2020 to April of 2020, the prices plummeted back down to about 600. So we saw a really sharp $100,000 price drop. Now, obviously, that was the quote unquote bottom of everything. And as the market picked up in the what we call delayed spring or summertime in the months of May and June, it kind of like averaged out and balanced out to somewhere in the 670s, 680s. So if you look at the last 20 months, prices are up. But if you look at the last 6 months, prices are down, right? So that's why you have to understand what's going on instead of just looking at one artificial number, because we've had such a huge fluctuation and swing of the condo market prices, okay? So a lot of people are talking about year-over-year prices, but we have to talk about month-over-month change, which is what I just went over, right? If you are kind of looking, if you're listening to this on podcast, you'll basically see a giant V, okay? Like we recovered, but not all the way, okay? If you're watching this on YouTube, I'll put the chart up here so you can have a look. It's kind of crazy. Now, currently, it's a whole different market as well because we're experiencing something that we haven't seen before, okay? It's like kind of a crazy storm that is coming and hitting the condo market pretty hard. And I pulled these numbers for you. Now, just for the sake of easily comparing things, we're going to compare only in the downtown area, okay? Now, if you're not super familiar with Toronto real estate and nerdy as I am, we have these little areas with little code designations, right? And downtown is in the area designation code of C01 and C08. For those of you who aren't real estate aficionados, you don't need to know what it is, but essentially the area is south of Bloor, between Liberty Village, all the way to about Dufferin or so, and all the way to the Don Valley, okay? So that's going to be our sample size of what we'll be looking at, okay? Now, if we talk strictly about pricing, condos in downtown experience the biggest fluctuation ever. It's insane, okay? They were as high as they were as high as $856,000, okay? And this is in March 2020. So right before COVID hit, you can see that the average price is insane, absolutely insane, okay? But now we're at about 760. So you can see that we are down about $100,000. And back to what I was saying earlier, if you compare this to 20 months ago, we were at $664,000. We're up $100,000. So if you look at, or if you're listening to what I'm saying, this highest peak is so high that the lowest point has a swing about $200,000 because it went up $200,000 from January 2019 until before COVID hit. That's $200,000 increase or 25% increase in about 20 months or so. Or not 20, 16 months or so. Then COVID hit, and then boom, we dropped $100,000. Okay, so the swing has been insane. It was even bigger of a swing because in April, like I was saying, it dropped all the way to like 660. But what happened is we got a little bit of a rebound in July and August, and we thought we were kind of semi in the clear, but realistically, we're not right now. And I'm going to kind of explain why. Okay. So prices are about stable right now, depending on like which pocket you look at or which building, because there are a few things that are skewing it. But what I've always looked at is the months of inventory. Okay, and for those of you who aren't following the months of inventory, it's essentially how many months there are of inventory before we have nothing to buy. So if the months of inventory is just one, it means that after 1 month, if no new listings come on the market, there's nothing to buy. Okay. So if you're between 1 and 4, like months of inventory, it's about a seller's market, meaning that all the inventory can be picked up in about between 1 and 4 months. If you're between 4 and 6, it's what we call balanced, meaning that it's not overheated. And if you're over 6 months of inventory, that means it's a buyer's market, meaning that the buyers have leverage because there's too much inventory. Okay. So when we look at, again, back to where we started, January 2019, the months of inventory was like pretty standard for like Toronto, like around 2, maybe 1.5. And that's kind of very normal for Toronto. We've always hovered around 2 and 3, and it's always been a seller's market. That's why there's multiple offers and all the other things that you hear about trying to buy a place. It's difficult, right? Now, here's the crazy thing. In December 2019, okay, so this was about like 10 months ago, the months of inventory dipped to below 1, which means that there were more sales than there were actual listings. Now, this can actually happen because there's like remaining listings from the previous month that roll over. But in short, there was way too many people buying and looking. That means the demand was too high and the supply was low, which caused a huge increase in price. So the huge spike in price was basically coming from December 2019 all the way until March 20. The months of inventory was as low as 0.89 and it hovered around 1.32. Okay, that's crazy low. That's when we saw the prices spike up like crazy. And this was all across the downtown core. Now, this is what I'm going to draw your attention to. Once COVID hit, like the full month of COVID, right? We got the numbers in April. The month of inventory jumped to 3.08. Okay, that means we've like 2.5x the amount of inventory we had, and the demand has come down. What that basically means is that less people are buying, more people are trying to sell, and they're trying to leave because they're freaking out with the pandemic. And as we continued kind of slowly recovering, the months of inventory continue hovering around 3, which is perfectly fine. Okay, it's still a seller's market. That's why I was telling people not to panic. And then in July, we saw it plummet down a little bit. Maybe people are away, or more people are buying because it was in phase 3. It was reopening. They weren't really too concerned about it anymore. And then we dropped back down to about 1.3. Okay, so we had a huge drop in months of inventory again. So another swing. And that's when prices kind of went back up to about the 750. But this is what has me troubled right now. Why I keep telling you, you have to know what you're looking at. Because in August, we got 3.5 months of inventory again. This tells me that everyone is either not looking for a property or a lot more listings come up. And the actual reality is that a lot more listings came up, okay? And this is what people don't really talk about, right? When you have so many listings that come out, it's very difficult to absorb them all unless your demand is through the roof, okay? So I'm going to read you the amount of listings that we have starting from January 2020. Now, this is mundane, but just follow on, okay? In January 2020, we had about 381 listings. February, 436. March, right? So this is right when COVID hit. We're at half a month of that. Inventory came up, 665. Then in April, 327, because no one was selling, no one was doing anything, everyone was freaking out. Then May, 573, means that we are increasing again. And that's when people are starting to, feel less worried about COVID. Let's call it phase 2 at the time. Then in June, 980. July, 1,207. And then August, 1178. So you can see our inventory has basically quadrupled. That means there's 4 times as many condos that come on the market. Now, we had more sales, obviously, and then that's what kind of made us a little bit more balanced. But you can see if we continue at this trend in the amount of listings that come out and we don't absorb it fast enough, we're going to have more inventory than we're going to have sales. And that's what's going to get the prices to come down in condos. And we're kind of just in that space right now. Now I have this like really nerdy chart that takes the difference of everything. And essentially everything in the condo space has been going up since January 2020, like year over year comparing last year, except in April, stuff took a giant plummet. But when we look strictly at the listings, and this is what I want to explain to you, is we had double the amount of listings almost every month in the last 3 months. So in June, we got another 60% more listings. Then July, we got another 90% more listings. Then in August, we got 134% listings. We doubled what we had in the previous year. So when you take out the seasonality of these kind of swings, because COVID kind of messed up our spring market, or some people call it summer market, delayed spring, whatever it is, right? It is skewing everything, okay? So the amount of listings we have, it's because it's skewed. I'm going to compare this in a year to date, meaning that we're going to take out the seasonality of these things and see how much we had from August 2019, so January 2019 all the way to August 2019, and the same thing for 2020, okay? So when we look at the amount of sales, we're down about 16%. So in 2019, we had about 2,600. In 2020, we had about 2,300, okay? So that means we're down 16%. Now, when it comes to listings, here's the crazy part. Listen up. 2019, we got about 4,500. And remember, we were just starting to get a little bit crazy, right, in 2019. And then in 2020, right now, we have 5,800, okay? We have 27% more listings in a pandemic world in which we had 16% less sales. That's why if we follow this trend, the months of inventory will continue going up. It's really crazy, right? And if I just strictly look at the September numbers right now, we are having a ton of listings coming out. So normally when we log into we call it the backend, which is like the MLS system, I monitor the downtown kind of sales and kind of new listings that's come up. Normally, I think on a week, if it's a busy week, we'll say like, in the springtime or the fall time, we'll get somewhere between like, 500-600 listings a week, okay? Which is like in a busy market. Right now, I'm seeing 800-900 a week, as high as like 200 listings a day that come out. But these aren't getting absorbed, right? So when I kind of look at these numbers and how many listings are coming out in September, I worry because I don't think the sales are going to be increasing as fast. So we could be seeing a really high month of inventory at the end of September, and we'll kind of have a better gauge of this in a week or two when the TREB numbers fully come out. Because the challenge with having kind of like a really high months of inventory and mixed with all the COVID situation is that nobody is buying and more inventory keeps coming out in such a rapid rate. You have to remember, the lack of international students means that no one really needs to be downtown anymore. They're doing a lot of virtual kind of learning right now. Then you have a lot of people who are working from home, so they don't actually need to be living in a smaller place. So they've moved out into kind of like the burbs so that they have more space. And then you also mix this with a lot of completions, meaning like a lot of pre-construction condos have been coming onto the market because 2020 was supposed to be a record year for completions. And when you marry all of that, that's a ton of inventory coming into the downtown core that really can't be absorbed. And that's really what is kind of freaky. Like when I'm looking at these numbers right now, that like the amount of listings that have come out, I think there's about like 23 or 2,400 listings just like until right now, which is like September 25th as I'm recording this, okay? But I've only seen about 350 sales. So when I look at the months of inventory, I think we're going to be at like 5, if not 6, which means we're going to be for the first time in a balanced market in Toronto for condos, which is crazy. It's really crazy. Just for a little bit of comparison to kind of give you an idea of what this means, okay? Do you remember in 2017 in April when they announced the Fair Housing Plan, okay? This was Kathleen Wynne, where they put a foreign buyer tax of 15% on everything. We saw the 905 area, specifically like the Vaughan, the Richmond Hill, the Markham area, the house prices plummeted, okay? And at that point, when house prices plummeted about 10%, the months of inventory, get ready for this, okay, in Markham was about 3.41. Yeah, 3.41. Richmond was about 4.23. Vaughan was about 3.01. Okay. If we're already at 3.5 months of inventory into downtown corporate condos, and I'm projecting that will be around 5 to 6. This is an amount of inventory that has not been seen in a long time. And it took basically the detaches to about almost 2 years before I started recovering. Okay. And they never have fully recovered from that just yet. Like the prices in the York region for these houses, the peak was still April. It hasn't actually recovered from the peak, even though people are trying to get into those spaces right now. Okay. So those like $2 million homes, they've never gone back up to that price. They're still sub $2 million. So what does this mean for the condo space and the pricing in the future? If we haven't like recovered for the last 2 years, we could take that long. But obviously, we don't want to use that as the only metric because there are other things that happen between the Fair Housing Plan in 2017 that was announced up until now, right? Like 2018 was the announcement of the stress test, and then people couldn't buy $1 million homes with less than 20% down, right? So that slowed down the recovery. But it's just to tell you that the recovery to get back there takes some time. Other things could be happening, a second wave, which sounds like we're getting, maybe a third wave. We don't know, right? So until the demand for condos come back, meaning immigration has to come back, student rentals have to come back, maybe eventually some people need to go back to work and they need to work in the office space, we're not going to see a huge demand for condos. And when we see a huge drop off in demand and a huge increase in supply, that's going to lead to prices dropping, right? So what I see will be happening, and why I'm telling some of my clients who are investors, you could be watching out for a drop. There could be a drop. Like when people need to sell their condo, maybe because they can't get a tenant, which I'll touch on a little bit later, or they're kind of not be able to carry their condo, and there's so much inventory right now, they're going to want to drop their price. And once one person drops their price, the next person that buys, it's basically going to be a price drop as well. Because condos are like, when you go straight up to condo, a lot of them have the same layout, right? Except the variation is like a parking or the view or the height of the building. So the new buyers can be like, well, if that one sold for X, I want X plus or minus this amount, right? They're going to have a lot of selection, meaning they could negotiate with you. And if you are one of the people who are in desperate need of selling, you may actually succumb to the price reduction even from the last one, right? Now, if you don't need it, or like you don't need it because the mortgage deferrals have ended and you can hold it for a lot longer, then that's fine, right? But there are going to be people who have over leveraged themselves where they need to sell, and that's going to be where the price dropping is going to start happening. Okay. So I think we're going to be kind of seeing that in the next month or two, because the mortgage deferrals have essentially ended now. And I think a lot of people were putting their property on the market in advance of it ending, right? So I expect there's probably, let's call it a bloodbath in October and November, when the realization that condos can't be sold for what they initially thought, or even with the expectation of a little bit of a drop off since COVID. And if they don't move, I think the bloodbath is going to happen. And that's when you can probably pick up properties for a discount, okay? So now let's move on to the rental market. This is crazy. We have so much supply in the rental market. It's absolutely ridiculous. I'm looking at these numbers that are coming up. It's like thousands and thousands of listings every week. It's absolutely insane, okay? And this is because there's a lot of little factors circling around. The main one, I would say, is a lot of inventory has come online. So I'll give you an example. There's condos that have like 400 or 500 units from pre-construction that are being completed in the downtown core, okay? And they all get completed within a few months of one another. So they all go on the market. Normally, before the rental market, kind of took a giant hit and all the prices came down, I would say 400 or 500 units could be filled up in 2 to 3 months. Okay, and that's really, really fast. Now we're seeing these buildings with 400 or 500 units, and they're just staying around. They're stagnant, right? Because not many people are looking to buy. There's not, rent. So they just stick around. And a lot of people during these pre-construction phases have occupancy fees, so they need to get it covered. So a lot of them just don't care and they drop the prices, and then they try to get someone in there. Now, here's a funny caveat I'll tell you. When we're looking at the year to date, removing the seasonality of numbers, we actually have only like 5% less amount of properties that were leased, meaning like if there was 1,000 properties that was leased last year in 2019 till now, we had like 950. Okay. Same thing, right? So like the sales are about the same, kind of like what the rentals about the same, kind of like what we saw with the sales. But again, what's the changing and deciding factor of why prices are dropping again is there's so much inventory. Like it's a lot of inventory. There's a building called Zen King West in Liberty Village that's built by Center Court. I have nothing to do with it. It's just what it's called. Um, and there's about 400 something units, and Center Court has a good reputation and they don't have occupancy. So all these things are just coming on due. So last time I checked, the amount of listings on Zen King West for rental was like 127 or 150. It's insane. They're going to need to fill those things up, right? Like, because people need to cover their mortgage costs, right? So that's a lot. Some other things that we got to watch out for that's increasing the supply is obviously a lot of people are off the short-term market now. So there's a lot of these short-term markets, short-term rental condos that are coming available for long-term. So that's also increasing the inventory. And here's just a couple of things that I'm seeing from helping our clients lease out some properties. We had a client, a 2-bedroom in Ryerson, had it for $2,800. Took about 2 months to get it to 20 to get a tenant in there, and we had to drop the price to 24. We had Bachelors by Yorkville, that was 2,000. We dropped it to 1,650. We had some stuff in the South Core, which is by Union Station, and went from 25 to 2,100. And in these buildings, there's a lot of supply. So like essentially to get your unit leased, you have to kind of be like beat everyone to the bottom and get a tenant in there, and the tenants have tons of options. So it's not really like area by area. Like certain buildings have a lot of inventory, right? So like if you look at, like I was saying, the Airbnb buildings, like 12 and 14 York, there's also like 120 units for lease because a lot of them came back, right? Between the two buildings, there's about like 1,000 units, and 120 of them is like 10% of the entire building is empty right now, which is crazy, right? That's a lot of units that you have to lease. And a lot of people are moving from kind of like a smaller one to a larger condo, and they're basically paying the same rent, if not even less, because the prices have dropped upwards of like 15%. So again, there's a lot of competition for landlords out there because there's less tenants that are looking to live downtown right now. So crazy times. Another one that we have was Dad Daniel's Lighthouse, which is by Queens Quay and Richardson, which is Jarvis. So where the Loblaws is, there's another like 500 units coming up there. And last time I checked, they've been in occupancy for a few months now, and there's still 57 units for lease. It's crazy. There's a lot of units for lease right now, and that's not counting all the other like high inventory units, right? So you really have to look in the long term and see, are you able to carry these properties? Are you going to be able to reduce your rent, right? The benefit to, say, having a pre-construction like the Zen King or the Daniels Lighthouse is that, when the market becomes better, you're not under rent control, right? So you can increase the rent back to market. However, for buildings who were finished before November 2018, you're under rent control, which means that you can't increase these rents. So if you went from like say $2,500 to $2,000, you can only increase it, call it 2% a year, and that's assuming Ford doesn't put another rent freeze on the next few years, right? And to get back up to 2,500, I think it's gonna take like 6 or 7 years before you even get there, right? If the same tenant stays. So you really have to kind of analyze whether you want to lease it, sell it, or whatever. And the crazy thing is, if you sell it, depending on how much you bought it for, you could be losing money. So it's not a very good time to be a condo investor right now, unless you've been doing this for the long run and you have been building a good portfolio to kind of weather this, or you have some good tenants, right? If you've been recent into the condo space, you really have to figure out exactly how you're going to navigate this. And I would say if you bought something in 2018 and 2019, selling it now may not be the best idea. Maybe just putting a tenant in there for lower rent and just riding it out, you could probably come on top. The question becomes, can you sustain that negative, call it like 2, 3, maybe $400? Yeah, so it's a tough time. If you guys are kind of struggling with some of these decisions, I'm happy to give you a hand. You can reach out to me. I'll put my contacts in the show notes, or if you're watching this on YouTube, it'll be on the screen, okay? Another thing we have to kind of keep in mind is the mortgage deferrals have started ending. So I don't think the supply is going to be going down anytime soon. I think if anything, there's going to be more and more supply as people realize, oh crap, this mortgage deferral is ending and I need to start paying the mortgage payments, right? So it's going to be a long, I think at least minimum 6 to 8 months, like bad times for condo space. Maybe even takes a year and a half to 2 years to recover. So it's not to paint a doom and gloom for condos because it's not all that bad. Okay. So like I probably spent the first half of this podcast painting a terrible picture for you. Okay. But let me give you some positivity. Okay. The Federation of Rental Housing Providers of Ontario, I don't even know where these guys are, but they've made some headlines because they basically came out and said that in the next 10 years, we need about 200,000 units completion to meet the demand that we have in Toronto. Okay. So let's take a step back outside of COVID. Prior to all this, we saw condo prices jumping and spiking like crazy with rental demand because immigration, students were here, lots of jobs were creating here, right? And like I was saying before, we've always had a supply crisis. This is the only time that we don't have a supply crisis because everyone's like, well, there's supply in downtown, but you know what? I don't really want to go there because of COVID reasons, right? So we have to look for this for the long run. So if you're a savvy real estate investor, you'll know that real estate is not a short-term gain. You're not trying to flip these things like stock. You need to go the long game. Think about holding your property for 5 to 10 years. Don't panic and freaking sell out. And this is why this is good news, because if we need 200,000 units in the next 10 years, that means we have to build 20,000 units just to survive this demand. Remember, there's a delay for 5 years for any completions with condos, if it's especially like a high rise, right? So we're going to see like a shortage of units in the next 5-6 years, especially if we're not building fast enough. So all the supply I was talking to you about earlier, completing in 2020, we're getting it with it because we had a huge spike in pre-construction sales and starting construction starts in 2016 and 2017. So now we're in 2020, like 4 or 5 years later, and we're slowly starting to see the supply come online. And that's why there's a huge delay because you can't build condos fast enough. Like, yeah, you could build a house maybe in like 6 months or so, but you can't really build condos because it's harder. And the other thing you have to remember is prices aren't going to come down for pre-construction too much. Okay. It's not because I'm saying that, you know, they're going to be less demand. What's happening is it's harder and more expensive to build these condos. Okay. It's harder to find people to work as labor has gone up. Having EI extended for another year or so, or CRB, or whatever Trudeau is calling it now, right? It's not going to incentivize people to go to work. The cost of lumber has basically doubled since COVID. Concrete has a shortage. So all this stuff is going to cause a price, the prices of condos to go up. So again, when the margins are so slim for the builders, they're in business to make money. And they're going to have to continue building at this rate. So we may start seeing incentives in the pre-construction world with like guaranteed rents or like interest on your deposits or these 5% kind of downs I was telling you about. We may see them come back because they need to get these projects up and going. But for the actual cost per foot to come down, maybe a little bit if their margins are very good, if they bought the land a while ago. But for new builders or people who are just builders who are just getting a piece of land right now, I don't think these prices are coming down anytime soon. And then when you marry this up with me talking about, I think it was a month ago or a few weeks ago, I was talking about hyperinflation and how it's going to kill people. Trudeau, because of the second wave, just said that they're going to keep interest rates low. Here, I'll quote you. I was watching this, I think, a few days ago because he was making a press conference. This is him word for word, verbatim. I know some people are asking how we can afford to all this for Canadian. That's fair. The low interest rates mean we can afford it. And in fact, doing less would end up costing far more and a slow recovery and bigger deficits in the long run. And then Trudeau goes on to say that, you know, don't take on debt that you can't carry. Let the government shoulder it for you. So essentially, he's saying that he's going to be printing money constantly over and over again. And because interest rates are so low, they're going to continue doing this, which basically means that, yes, while there are people who are going through hardship because of COVID and they're going to need that money, I absolutely agree with you and him in doing that. But what's going to happen is there's going to be so much money in the market right now. The banks are going to be free to loan because the Bank of Canada is buying back all their debt. They're changing the balance sheet, right? I was talking about last time. That's why you're seeing mortgage rates go down because the banks can lend more money and they're competing with each other to lend more money. Like I had a client get prime minus 0.8 in a 5-year variable non-insured. That means their mortgage rate was like 1.75 for 5 years. That's free. Like the inflation mandated by the Canadian government is 2%. Your mortgage rate is less than that. So what I'm saying right now ultimately is I think if you survive the COVID pandemic and you take advantage of these low interest rates and the fact that we're going to have hyperinflation coming because of all the money printed, you could be out ahead in the long run. And that's why I'm saying this has to be a 5 to 10-year decision that you're looking at if you're going to be investing in real estate. It's not a short-term thing, right? Like Warren Buffett's always saying, if there's blood on the street, that's when you buy. I'm not saying you need to buy. You obviously got to take care of you and your family first. But if you're in the position where you're not affected too much by COVID or your income hasn't changed too much and you can take advantage of these, there are opportunities right now to be buying downtown properties for less than what they would normally be going for. If pre-construction prices aren't coming down, but the resale and people have to get rid of them are coming down, why don't you buy that? And then you can make the delta in like 5-10 years when the COVID stuff is over and the market goes back to normal, right? You really, like, I really think that Toronto is going to come back for sure. I don't think these headlines of saying, oh, city life is going to be gone and we're all going to be living in cottages. I don't think that's going to be the case. We're going to have some come back, maybe not as much. Who knows? I have no idea. But I do believe in the fact that Toronto is going to be coming back and flourishing again, maybe in like 3 to 5 years. Okay. So you know how I was saying the FRPO was saying we needed about like 200,000 units in the next 10 years. So I got really nerdy again and I went to CMHC. So they have these housing starts and completion, right? So last year we had about 23,000 apartment completions, meaning condos and stuff, right? So at this rate, if we continue it, we may get to about 200,000 because we have to remember this is a backlogged demand. It's not, if immigration keeps coming in, we're going to see more and more demand, right? And this year, right now, we had about 18,000. Okay, so we got about 25% increase from a year-to-date perspective because this year hasn't ended, right? So we'll probably clear 23,000, but this just isn't enough, right? Because the total amount of properties finishing in all of Ontario, okay, not just Toronto, all of Ontario is about 51,000. So this includes like semis, detaches, towns, condo stacks, and all types of housing. Okay. And if we were getting about 150 people immigrating here into like the southern Ontario area, that means for every property that's being finished, there's 3 people that must live in it. Now, that seems reasonable if you just think about it, like a family, a mom, dad, a kid. But you have to remember, how many of these unit completions are actually apartments that are 1-bedroom and bachelors? And I would say, based on the numbers that CMH did, it's about 50% or so is apartments. And let's just say half of that is 1-bedrooms and bachelors. It's probably more depending on the building. That's 25% of these units that are being completed, or like 12, 13,000 of these completed units that are just 1-bedrooms and bachelors. Those ain't fitting 3 people. So until we get more supply and for families or even just like more affordable supply, I'm really, really doubtful that we're going to see prices kind of drop in the next 5-6 years. So this is why I'm saying this could be a buying opportunity if you're an investor and you understand kind of all the macroeconomics and kind of the immigration and the population that's coming right now. And the last thing I'll tell you is Urban Nation, which is a very reputable kind of research firm, they said that in 2020 Q2, they recorded the lowest amount of pre-construction sales since 2008 during the Great Recession from the US, okay? Again, I'm going to circle back to this. It takes 4, 5, 6 years to complete these projects. So if we have the lowest amount of sales right now, some of these buildings maybe aren't going into construction. In say 5, 6, 7 years, call it 2025, 2026, we're going to have a supply crisis again, right? So that means the prices are going to go up. So if you're able to hold on to properties again for 5, 10 years with this kind of low interest rate, hyperinflation coming around, people not wanting to buy and they're trying to sell right now. If you have a long-term mindset for real estate, now could potentially be a time to actually buy condos, okay? Now, maybe not right now. I think there's going to be a little bit more blood on the streets before it happens. So I would say, and I was telling a lot of people, maybe like mid-October, when people start seeing the numbers for September come up, I think we're going to have more blood on the street. So what's the strategy? Well, this is what I've been telling my clients, okay? You want to make sure you're able to cover your rents in the future. You don't want to be stuck with a property that's going to be negative for the next 5 to 10 years, because that's just not a good investment, okay? So what we're going to be doing, the strategy I recommend is you want to be buying in buildings that are not rent controlled, meaning they're finished after November 2018. And the reason for that is, let's say this pandemic thing goes on for 2 years, okay? And you're carrying minus $200 in rent because, prices came down, but so did rents, okay? But minus $200, if you're in a good spot, not the end of the world, especially if you have a strong portfolio of cash flowing assets in different spots. Yeah, you can use the positive cash flow from other properties to balance your negative cash flow in downtown Toronto, right? So this is an appreciation play for, easygoing tenants, right? Because condo tenants tend to be easier to deal with and you don't, less management, right? So when rents return to normal, I'd say the first wave we'll probably see is like when students go back to school and the demand increases, you're able to increase your rent more than that 2% or whatever is dictated by the government, meaning that you can come out of your cash flow negative faster and then you won't be negative after the rental rates go up. So in essence, you're buying low with the prices, the rents are low, but you buy in a building that allows you to increase the rent so that in a year or two, you'll be cash flow positive. And then you can just ride it out because we're going to have a lack of supply and demand is going to continue as long as, again, immigration continues, schools go back to work, and the pandemic is behind us. So is this a good time to buy? Yes and no. I would wait a little bit longer. I wouldn't rush too much because this is just the start of what I think could be a bloodbath in downtown. But if you understand everything I explained to you in this podcast and trying to provide you some good information, and you also agree with me that this is going to be happen, you should probably reach out to me and get ready for the opportunities that are to come in the next month or two for these condos in downtown space. I would attribute this to kind of like in March 2020 in the stock market when everyone's freaking out about the pandemic, and then all the stock prices dropped 30%, and it was just like, well, it's a very cheap time to buy good blue chip stocks, right? Like banks, energy companies, right? Because the dividends didn't change and the prices came down. This is exactly the same thing, right? The rents obviously came down, so say dividends went down, but the prices have come down significantly. Like I said, there was always going to be a delay for the real estate market to kind of change to what's going on because real estate's not as liquid as stocks. So this is that buying opportunity if you have been waiting for. So make sure you reach out to me and then we can kind of get you started on how to find that non-rent control building. Now, for those of you who are kind of on the opposite end and need some help on kind of whether you should sell or whether you need to just ride it out with like a lower rent tenant, you can also reach out to me. We can kind of analyze your cash flow and see whether it makes sense for you to hold, or if you really have to sell, then you will have to sell. Obviously, not something I recommend, but everybody's situation is different. So you can also reach out to me on that. I'm happy to, provide you a little bit of assistance on kind of what your portfolio looks like and whether it makes sense for you to hold. Again, if you're watching this on YouTube, my contacts are on the screen. If you're listening to this in your car on a podcast, my show notes will be have all my contacts number. You can reach out to me then. Until next time, hope this was very helpful and the first half didn't freak you out a little bit. I try to put a little bit of positivity at the end of it. So try to keep neutral with this. But everybody obviously is in a different position. And of course, I'm here to just help you guys to how to navigate this real estate world and, increase your portfolio and eventually over the long run, create some wealth with it, even though we're in a little bit of a bumpy ride right now, especially in the condo space. Okay. So until next time, your move, your future. See ya.